Begin our panel to untangling your financial assets and identifying your net worth and how to really talk about your net worth. Do you really know what your net worth is? So we have an amazing panel. I'm going to just get going because there's so much to talk about. So hopefully everyone knows about Savvy Ladies. We are here to offer free financial resources to help you along, answer your financial questions. We have a free financial helpline. Tracy here will drop in the link so you know. Feel free during the call or after the call to submit your financial questions. We have over 300 volunteers who pro bono give their time to answer your questions. You will connect with them. It is safe, secure, trusted, and really they're amazing listeners. They will share their expertise with you and give you options and your choices for your next steps. So without further ado, Lisa Zeiderman is our Savvy Ladies Board Chair. She is also our moderator this evening for our panel and this whole panel series. Lisa, I'd like to welcome you to tonight's program and just thrilled that you've pulled together an amazing panel. And I'm going to send it over to you. But first, let me thank, on behalf of Savvy Ladies, our sponsors for the series. So Miller Zeiderman is a series sponsor, and we thank CBIZ and Morgan Stanley for sponsoring this amazing panel that you will have this evening. So Lisa, thank you, and I turn it over to you.
Okay, well, thank you, Judy, and thank you all for coming, and thank you for the amazing panelists that agreed to appear tonight. We have so much to cover, and I'm going to just get started, and we're going to just roll right into it. So I have so first of all, why don't each of you introduce yourselves if you can, starting with Gary, and then Lauren, and then Maggie, and then Jeff. Just a quick intro of who you are, what you do, and how you're related to the world of divorce.
Sure. So, good evening, everyone. Pleasure to see you all. I'm Gary Rosen. I'm a managing director at CBIZ, which is a global accounting firm. You'll see I have a number of certifications under my name. That I always say in 275 gets me on the subway. But I'm a CPA, I'm a certified fraud examiner, I'm a certified valuation analyst. I review internal controls. I do a lot of expert testimony, but I also write the roadmaps that we utilize as we go through the cases. And we're going to talk more about that as we go through the process tonight.
Hey, Lauren, you're next because you're right in front of me.
You got it. Well, nice to meet you, everyone. I'm Lauren Lavender. I'm the Chief Marketing Officer of Hello Prenup. Besides that, I have also been in your position. I've gone through the prenup process. I've been married, had the children, and gone through a divorce. And so I am really excited to be a part of Hello Prenup and Savvy Ladies to really help ladies in need and anybody in need through these really difficult times. So thank you so much for having me.
Glad to have you. Maggie?
Hi, everybody. Welcome. My name is Maggie Patrick. I'm a financial advisor at Morgan Stanley. I too am divorced, single mom of 3 kids. I got divorced after 16 years of marriage, and over the past 14 years have built my career as a financial advisor assisting divorcing women. And I'm also a single mom of 3 kids.
And Jeff.
Hi, I'm Jeff Landers. Good evening. I am a CDFA. I've helped over 1,000 people, mostly women, on the financial aspects of their divorce. I've been doing this since 2010. I've written 7 books on the topic. And I'm also divorced after 34 years of marriage, and it's still amicable. I spoke to my ex this morning. So, and I have 2 adult married daughters.
Okay, great. All right, so let's dig in. This is a question to each of you. Many women tell Savvy Ladies that divorce feels financially overwhelming to them before it even becomes financially complex. From your perspective, why does not knowing what you own create so much stress for women, and why is identifying net worth such a critical first step? I'll go first to Gary.
Well, from the stress standpoint, because I always say that, I say knowledge is power. And if the more that you know, the less stressed you're going to be because you're in control of your own destiny or in control of your own finances. The net worth is such an important aspect of any marriage because, well, you have the official net worth statement, which is essentially a sworn affidavit by both parties to what the assets, liabilities, income, expenses are in the marital estate. And it's really, I talked about the roadmap earlier. It really becomes the roadmap of how this is going to get divvied up. But as you'll see as we go through the process, what's not on the net worth statement is probably more important than what is on the net worth statement. Because oftentimes people have things that are very portable, whether they're crypto, jewelry, stocks, bonds, other types of assets that you might not be aware of. So it's very, very important that you get a complete financial picture as you go through the process.
So Maggie, what's your response to this question?
Well, I think it's a really, really important question. I think that, no matter whether you're the person being left or you're the person who asked for the divorce, so many people tell me that they kind of feel like they're helpless and that the process is driving the situation and that they have no agency. And when you can lay out and, look at a spreadsheet or a handwritten list of everything that you've got, it really does give you a better sense of control. And that's when you can start to discuss and visualize your own future because you're going to know, ballpark what's at stake and what you're going to get.
Lauren, as a client and
Absolutely.
tell me what it was like as a client.
For sure. So money is options, right? If you know how much money you have, you understand your options. And so I also empathize with it's so much easier just bury your head in the sand and go, whatever, let's just divorce and call it what it is. I just want to move on. Because when you face your money, there's so many feelings attached to that, right? Shame. How did I go so long without knowing about this? Why didn't I understand all of that sooner? And so I empathize with how hard it is to face that information. Because especially as women, we really, tie our identity and our emotions to the space and time. But it is important to address it when you're ready because then you understand your options. And once you understand your options, you're coming from a place of power. And then you can make choices that are best for you instead of playing on this defensive mode of, oh, I'll just sign whatever. I just want to be done with this. This is too hard to deal with.
Mm-hmm. Yes, we all know that I just want to sign anything just to get done feeling. Jeff, as a CDFA, what's your feeling about this?
Well, I think the biggest stress is that, especially for women, they don't know what they don't know. All too often, they just never got involved with the financials. They're busy working, taking care of the kids, taking care of the house, going to PTA meetings, doing all of this. I can't tell you how many women that I've spoken to have no idea how much money their husbands make, have no idea where their assets are or what their assets. And I always stress to people, I mean, forget about divorce. God forbid, your spouse got hit by a bus and you don't know where your bank accounts are and you don't know what you own and what you don't own and how much your mortgage is. Of course, that creates a lot of stress. If you knew everything, it wouldn't be as stressful. And of course, many husbands are controlling and narcissistic. And it's like, you don't need to know about that. I'll take care of everything. And there's some women that just don't want to know. I mean, I remember when I was married, tax returns, I asked my wife, at the time, you need to sign it and she'll sign it. Don't you want to look through it? No, I don't care. I don't care. So that's a problem.
Yeah, Jeff just raised a great point. I was going to bring it up too. Tax returns. I mean, you're signing this under penalties of perjury. And you really got to understand what is in it. And I can't tell you how many times we use tax returns, not only in checking the net worth statement, but also in a court of law, because it's not only what's in the tax return, it's how the tax return is prepared and what guidelines the tax preparer has followed in order to come to the net income and taxes that you and your spouse at the time owed.
And it's also a good way to find hidden assets. If you look through the tax return and you see, oh, we paid capital gains. Okay, that means something was sold. What was
Mhm.
sold? So going through the tax return itself is a good way to start spotting red flags to see, is there some shenanigans going on? It raises a lot of questions.
And I'm
So
going to
that
use the
brings
term rather than shenanigans, I'm going to use the term hiding in plain sight.
So that brings me, Gary, to exactly my next question, which is, as a forensic accountant, okay, on all of these very complex divorce cases, what types of assets are most often overlooked? I'll use a kind word, okay, or misunderstood during divorce, like stock compensation, perhaps business interests, restricted stock units. Talk to me about
Yeah.
named all of them. So tell me
Yeah, you
what
did. You did a good job of that. So my
thank
work
you.
here is
A
done. But
preliminary job.
but restricted stock units are typically compensation that's tied to somebody that works for either a public company or a company that might be considered going public, that really have no value necessarily at the time in which they're issued. However, years down the road, when that company, and I'm using the term blows up in a good way, it's going to be very, very beneficial to you as the holder. So think about a company that might be closely held that ultimately gets listed through an IPO or gets bought out because a competitor decided there's a strategic investment. That's one area. The other area is those of you that are involved with spouses that have a cash business. Okay. Oftentimes you've got to look at the lifestyle that you're living, look how much money is on your tax returns, and reconcile in your mind how much money is going, for lack of a better term, south that is not being reported. You're getting the benefit of that while you're living with the spouse. You should be entitled to the benefit of that if the marriage doesn't work out.
So, in terms of Maggie, talk to me about when you actually work with people in terms of putting together a net worth statement. I know you've worked with some of our clients, for example, putting together a net worth statement
Yeah.
and trying to identify the assets. How do you make sure that everything is included in the net worth statement, and what's your process for doing it?
Well, it's such an important part of the process, and it happens at the very, very beginning. And I think it's a real eye opener for clients. One of the things I'd suggest is that you kind of go back and go through every job that you've had, every place you've worked, every place your spouse has worked. That's kind of the best way to begin, I think, because people get overwhelmed by the money question. But if you just think about chronologically everywhere you've worked since you got married, everywhere your spouse has worked, and then ask yourself, was there a retirement plan at that job? And if so, do I know what happened to that money? Is it at Fidelity in some long lost Roth IRA? I mean, this is really honestly what happens to so many people. It's really, very much the norm that people kind of lose track of all these different accounts. So I would say like that's kind of a good starting point. It's obviously you know, a it's a 20-page document. So there's a lot to it. And it gives people who are getting divorced, the opportunity to essentially think about how much they're spending and how much they have, and also what their liabilities are.
Now, Gary, going back, first of all, I called you a forensic accountant. Can you explain to people what that means actually in terms of what you do in complex divorce matters?
Sure. And essentially, a forensic accountant is someone, it's almost like a financial detective. What I do is I go through and I analyze complex financial data. I look for things like fraud. I look for, and I'm going to use the word embezzlement, because if your spouse is taking money out of the marital estate that you're not aware of, that's really embezzlement because it belongs to both of you. I do investigations. I do litigation support through expert testimony. I do depositions. Um, the five certifications I mentioned earlier, one of them is not only I'm not only a CPA in two states and a certified fraud examiner, I'm also a certified valuation analyst. So what I can do is I can also look at a business and tell you what the value of that business is. And just because the business is not making money does not mean it doesn't have a value. I'm going to mention a name like Amazon. Amazon for years and years and years lost money. I'm going to say, let me see a show of hands of how many people would love to own stock in Amazon, right? Even though it's losing money. But all kidding aside, there's different ways to look at valuing businesses. There's three different approaches: the income, the market, the asset. We're not going to get into the details, but you really got to look at it three different ways, or every which way from Sunday. And that's what I do with my certification. I'll pick up this pen and say, why is it black and silver? Why is it black ink, not blue ink? Why is it not a click pen? Yeah, I look at things and figure why, and I pull that thread. And once I start to pull that thread, everything else starts to fall into place.
So Jeff, in terms of you have a different credential, which is a CDFA, can you explain how you work with somebody with your what a CDFA is and how you work with someone?
So it's a certified divorce financial analyst. I look at all the assets. I mean, to play off what Gary just talked about. I mean, many times you'll see somebody, they have a closely held business, but they're paying a lot of their personal expenses through the business. And for the spouse that's not associated with the business, that could be a double whammy. Why? Because if the expenses are higher, the net income is lower, which means the valuation of that business is lower. And also, if they're paying their personal expenses through the business, that means they don't have to take that much of a salary, which means they often say, I can't afford to pay this alimony or child support. So they get hit twice when they pay personal expenses. And someone like Gary would go through when he values a business and back out all of those, personal expenses. So I look at all of that. I look at other things, whether there's deferred compensation, what Maggie was saying. I always look at, previous employment. We found in one of the cases I worked on that there was a pension, okay, from like 3 jobs ago that either intentionally or unintentionally was not mentioned. Also, are there any trusts? Okay, especially I worked on a very large case where the husband was transferring a lot of real estate into irrevocable trusts with the children being the beneficiary. But what that did was totally take it out of the marital estate so that it wouldn't get divided. And of course, there's a look back period and there's ways to unravel that, which we were successful in doing.
Gary, let me ask you something. You and I have worked together before. So, what are the steps, the practical steps that a spouse can take to begin uncovering assets when the information feels inaccessible or incomplete?
Well, one thing they could do is when they meet with counsel, the counsel always has the subpoena power. So what they could do is they can get the counsel to do a subpoena. You could also have a private investigator do a background check with the individual, getting their social security number, because that could lead to other assets that are not listed by the spouse. And then what you could also do is start to pay attention to your lifestyle. As I said before, you look at the lifestyle that you're living and you look at how much money's coming in, and you say to yourself, you know what? You know, how much is going into the bank and how much is coming home in dead presidents that are just handed to us for our living, our lifestyle. So what you got to do is take an inventory, what your mortgage is or rent, what your utility bills are, what your insurance is, how much is going away into 401k or retirement type plans that you might not even know about. Get the pay stub of the spouse and compare it to what's reported on the tax return. And then also look and see if, as Jeff was saying, assets are being transferred to other relatives. I've been involved in a lot of cases where they've been transferred to children. I've been involved in cases where they've been transferred to parents from the person getting divorced. It was an upstream back to the parents. So you got to really have your antenna up, your eyes wide open, and your ears to the ground.
So, I'm going to tell somebody is a couple of things that I learned in terms of tricks that I look for. Okay. So, and ways that people should be paying attention. So it is the natural inclination, I think, for many women, okay, to want their children's education, their 529s to be funded. Okay,
Hmm.
this is like a natural inclination. And Lauren, you're shaking your head, yes. Okay, and I think like that seems to be the thing, right? It's a great way for the moneyed spouse to actually, what would I say? It's not hiding money, but essentially, basically putting the money aside. And if you think about it, if the moneyed spouse is earning 100% or 90% of the income, and now they're taking all of this money and putting it into the 529 before the divorce has started, well, guess what? All your marital money is now in the 529 plans, okay? And you've just paid 50% of your children's education when maybe you would have paid 6%, 10%, 15%, 20%. And so putting this money into the 529 is, before the divorce starts, is a great place to put it for people who want to essentially protect their assets. Okay. The other place that I see, and Gary, Jeff, Maggie, maybe Lauren, that people actually hide money is they overpay their taxes. Do you see
Always,
that? All of you. Maggie, do you see that?
always.
Yes.
Yes. Okay. And you've got to look at the tax return, right? Because they may be paying their taxes by over 100 grand, 200 grand, right? They overpay their credit cards. If you don't do the discovery and the depositions and all that stuff, then you're missing that. So, Lauren, earlier you had talked about this idea of giving up, like people just want to sign. Well, how does that impact what I just said in terms of discovery?
Don't do it. Hang in there. Don't let contract fatigue win. A tactic when it comes to negotiation is to tire the other person out. It doesn't matter if you're going through a prenup, it doesn't matter if you're going through a divorce or you're in line at the grocery store and you're just trying to speed up self checkout. The person that gives up first is usually the person that's going to walk out with, the feeling of, hey, I got through this and we're done with it, but you're going to have the shorter end of the stick. So I highly encourage you to face the information, really understand what's going on, and go head first into it. And the other thing is it's going to take time. You can go to Vegas and get married today, but God forbid a divorce. It takes time. And if you don't know how much money is in the tax returns have been filed without you for years. There's a lot to unpack. There's a lot to see. There's going to be a lot of emotions coming up, but don't give up, because what you're fighting for is future you. The person in 5 years from now, when you've signed and you can look back and be like, holy cow, that was awful. It was expensive. It was adversarial. But I'm so glad I advocated for myself, especially if you have kids, right? You've got to think about yourself and the family first, and everything else will follow. And you have the Garys and the Jeffs and the Lisas and the Maggies of the world who can't wait to help you. When I went through this process personally, I was so intimidated. Like Gary, the person I was married to, I don't know what was on his tax returns. I still don't, right? I went through a
Yeah.
pre process with him and a divorce. And that was on purpose. His tactic was just, go through a mediator and we'll talk about this and we'll talk about that, drag it on for 2 years. I was married for 2 years. My divorce took 2 years. And so the point, though, is don't be afraid of counsel. I know it can be expensive. I know it can be time consuming. But if you had Gary, Lisa, Maggie, and Jeff sitting in your corner doing this for you, it takes the load off so you can focus on you and all of the things that you need to worry about in your day to day, especially if you're a parent. So don't give up.
And you know what? We know what to look for too. I had a case involved where the husband was a day trader and the wife didn't know it. And when we got to court, I was able to set precedents where I got the wife 50% of his net operating loss carry forwards, which were $800,000. He had lost $800,000 day trading. He was like a
Wow.
gambler with the marital estate. She didn't even know about it. I don't know if he did fail to file the Schedule E or what the situation is, but that tax return has a wealth of knowledge. You really, really have to sit down and understand what's in it.
And not only that, somebody in the chat said that they don't have access, even though they filed jointly. You could just get it directly from the IRS. Okay, if your spouse isn't turning it over, If it's a joint return, you could get it directly from the IRS. You could get a transcript online.
Right.
And Jeff, you could also get it from the accountant, right? The thing about this is that accountants don't have what we call privilege, right? They are not privileged. There is no privilege. So if your spouse is telling your accountant not to speak to you or not to give you the tax returns, they have no right to do that. These are
Right.
your joint tax returns. And while the transcripts are nice, the regular tax returns that were filed with the government are definitely even better. And the accountant must give it. And there is the subpoena power that Gary was talking about.
Mhm.
And I mean, as Gary knows, we have subpoenaed accountants and they don't want to cooperate. So they come in and they actually have to testify at a deposition.
Right.
They don't want to
Right.
cooperate. They'll do it at the trial,
And
right? I
Yeah.
mean, that's really the bottom line. So Maggie,
Mhm.
for people who actually do understand the assets early, okay, how does understanding investable assets
Mhm.
affect post-divorce financial stability and long-term planning? Can you talk about that a little bit?
Sure. I think that, one thing that is most impactful for clients is understanding what retirement assets you have. And really, probably the most important aspect of divorce assets for your long-term planning, for your life as a whole, is where you are with your retirement assets. So I would say that, tracking those down, and making sure you have a complete understanding, as Gary was saying, restricted stock units, people kind of like glaze over when you start talking about these more complex kinds of compensation plans, that especially like a higher up executives can have very complex stock awards. So having that untangled is just unbelievably impactful for everything in your life, honestly, your career planning, your college planning, your retirement planning, your housing, all the things that matter to you,
And
really.
Maggie, the important thing is that doesn't impact your day-to-day living.
Right,
That's like to the side.
right,
So you might not even realize that, as we said, that they're there. So you've got to
right.
look. And you know what? One of the things I would ask for is the individual's employment agreement
oh yeah,
Yes.
absolutely. Yeah,
Without a
find
doubt.
out.
and
Yeah,
insurance policies. Because if they have hidden
And
assets, dollars to donuts, they're hiding
financial
in plain sight.
statements. Financial
Absolutely.
statements. Okay.
If they go
So
to the bank for a loan.
exactly. Okay. They're not going to be telling the bank when they're going for a loan that they earn less. They're not going to be telling the bank that they have less assets when they're looking for a loan.
they'll do
Okay.
the
So
opposite.
they're going to do exactly the opposite. They're going to go to the bank and they're going to either tell the truth about their assets, okay, which means you're going to get a whole bunch of information, okay, or they're going to inflate their assets, which, by the way, is an admission against their interest if they're asking a bank for loan. And in some cases, it could be fraud,
I
right?
was
If
just
it's
going to say
an
fraud. Yep.
Absolutely.
Without
Yeah.
a
right.
doubt.
So
Without a
it
doubt.
could be fraudulent, and that is something that your attorneys can use. So it's those subpoenas that Gary talked about earlier. They fly in my office, okay? Because after we send out those discovery notices and you don't give this the discovery, then we just start subpoenaing because I just waited for that moment. So it's really important to actually make sure that you're not begging for your discovery, that you start to get your subpoenas out
Right.
and that you're actually going straight to the sources. The only place I would be careful is your spouse's employer. That's a place you have to be careful because you don't want your spouse to be fired. So that is
Right.
Right.
read carefully, and to make sure that you have court involvement and that you've given lots of opportunities before you do that, so that you don't end up in a situation that your spouse who is supporting you is or giving child support or any of those things, that you're then in that situation. So somebody just wrote, he is self-employed but makes zero income. My business is super profitable. He has nothing. I have all the assets, including the home, my separate property. How can I protect myself? Lauren Lavender, person, protect herself.
Well, there's a few things that come to mind. First of all, I'm so sorry you're in this position. Um, for if you're going through the divorce process right now, you want to make sure that you're really accounting for everything that's yours. And I would also do some discovery on what they have 100%. So, for example, in my position, my ex-husband, he had multiple businesses, zero income. How convenient, because we have a child together. So when it came to child support for our 4-year-old son at the time, how is that going to be calculated? Right. And so we would go look and he would move money from one business to the other and claim that this business wasn't getting any income. They're always 4 steps ahead. Right. And so if you're going through a divorce, make sure you don't give up on the financial discovery. Cry, go to the Garys of the world, have them dig through and understand this information, because you have a lot to lose if you are profitable. If you're entering into a marriage, you get a prenup, full stop. I mean, the best thing about a prenup is it forces everybody to have these conversations before you sign any contracts. So you can do financial disclosures on each other. What do we have? What do we want to have? It's so much better to have the conversations while you're in the honeymoon phase and you're excited about the next steps, because you're going to talk about money anyways. You're either going to do it in Lisa's office when you're panicking in a divorce, or you're going to do it in Lisa's office with a giant ring on your finger and you're planning your honeymoon, right? So you might as well do it when you're happy and excited, so we don't have to be in this position. But in all the words, don't give up. And especially if they have a business, I would do some discovery, hire the Garys of the world, go full bore, because all of a sudden, oh, wow, there's a lot we can work with here on that other side too.
And it wouldn't be
And
bad to
then
do a valuation for the business before you
That
entered
too.
into the marriage, because this way you know what everybody's bringing into the marriage. Somebody put an interesting comment in here, that somebody bought a lot of art, wine, coins, etc. It's you should get them appraised,
Mhm.
because these things go up in value, and if they use the marital estate to make these purchases, it's not theirs, it's yours. But when I say yours, I mean both of yours.
And
Mhm.
and that brings me, so Gary, 100% correct. You should get it appraised. And there are people who do wine appraisals. There are people who do
Hmm.
jewelry slash watch appraisals. They aren't all like everybody doesn't wear the same hat. You need somebody who specializes in that. Like there's art appraisers that we use. We use jewelry appraisers. We use wine appraisers. We've had gun appraisers, like
Sure.
all of it. Okay.
Mhm.
So you just have to figure it all out. Okay. What it is that you need to get appraised and then find the right person. A couple of things. Make sure they're qualified. Make sure they have testified before. Okay.
Mhm.
Make sure that they have testified in the area that you are. So if you're in New York, and I know this is kind of nationwide, but if you're in New York, make sure that they have testified in a court of competent jurisdiction in New York. This should not be their first rodeo. Okay. This, like, you need to make sure, you need to see a CV. You need to make sure that they have been qualified in as an expert in the field that they're supposed to be testifying in.
And they should
Very,
be independent. You shouldn't
yes.
have the spouse say, I have a friend of mine who does
Right.
appraisals.
100%. But that is an easy solution, just so we're clear. That's a super easy solution. The other question that I think that Lauren had answered about what can I do in terms of that woman who has a business and hers is profitable and his is not. I don't know if that woman is going through a divorce or not. If you're not going through a divorce, if you're just sort of considering it, you might actually consider a postnup, which Lauren didn't mention, but is something that, you can really say, like, this is going to be mine, this is going to be yours. This is like, I'm not going to pay support. I'm going to waive support for alimony for this person. There's a lot of different things you can do before you get to the part where you are getting divorced and then have to go to the Garys of the world. So, and I see yes in the process of the divorce. So you're going to need a good forensic accountant, because somebody shouldn't be actually in business. So I'll say a few things, Nancy. A couple of things. They shouldn't be in business and making zero. That doesn't make any sense. Number two, in my mind, okay, you need somebody who's going to go through the books like Gary, who's going to see if it's really zero, or are they paying all these personal expenses that should be captured in a return that is correct. I don't know the answer to that. And then the third thing is, are is that tax return correct at all? And You want to be careful about signing joint tax returns if they're saying that their business is worth is making zero. They should not have a hobby. And then I'm going to give you the last. If they're making zero, then maybe what really needs to be done here is a vocational analysis, which we will talk about in our very last session here. Okay, we will talk about vocational analysis, where somebody comes in and says, okay, this person is making zero, but they have all this ability, and this is what they could earn if they were actually doing something else, and that's where they should get hit up for support, etc. So there's a lot of different ways to go at this, and if it's New York, it's equitable distribution, so everybody has to prove their contributions to each other's business. So you have a lot of different ways to skin a cat here, essentially.
And
So,
if
right,
someone's not making any money in their business, perhaps they took out a large loan,
Right.
using a lot of the revenue from the business to pay back the loan. And because it's a loan, it won't show up on tax returns or things of that nature as well. So that's another way to kind of hide assets.
Or if it's a real estate related entity,
Right.
the tax return is going to show a loss because there's something called depreciation. And just to
Right.
talk for a second, depreciation, you buy a building for $1 million. It has a 40-year life, economic life, not useful life, because the building will probably last hundreds of years. But economically, you're allowed to write off 1/40th of that building. That 1/40th of the building could shelter the income,
Right.
show a loss, but the rents could be going south or revenues could be flowing to the individual.
Right.
so Gary, how do you participate with the attorneys? And can you explain that in the forensic process? And then can you explain what a Covell agreement is? Because I bet most people have
Sure.
heard of that.
Sure. I'll start with the Cobell because it's the very good place to start, as Julie Andrews said. But a Covell is basically an engagement letter that I'm engaged by the attorneys. So once I'm engaged by the attorney, the attorneys become my client. Therefore, everything that I discuss with the attorneys, fine for the attorneys, everything for the attorneys is privileged. The client, the mutual client, I should say, the mutual party, I should say, becomes responsible for the fees. But if I get on the witness stand, who's your client, Mr. Rosen? I work for Lisa Zeiderman at Miller Zeiderman. Don't you work for Mrs. Jones? No, Mrs. Jones is a client maybe of Lisa's, but I was engaged and I'm signed up with Miller Zeiderman. Um, so that's what we do there. And then what we typically do, as Lisa knows, is we sit down at the onset and we try and get a roadmap as to what an understanding of what the person knows, what the person's looking to achieve, if there's children in the marriage, if there's assets in the marriage, what type of business or assets the husband might have. We've been involved in some cases that there's been so many layers of corporations that we had to drill through. And ultimately, when we got done, we did find the crown jewel
Hmm.
that wasn't even related to the business that the husband was in. It was an ancillary business that he just decided to invest in. It turned out to be one of the biggest assets in the marital estate. So
And I
we,
think that's a
yeah,
good
I was going
lesson.
to say we don't leave any rock unturned.
It's a
We've
very
seen a
good
lot of
lesson.
worms.
It's a very good lesson for people, I think, to understand that you have to look at everything. And look, if we didn't do the discovery, if we didn't take the time, that case took a long time that Gary's talking about, okay, a long time. It took years, frankly, okay? So, but if we didn't do that, we would not have understood what that other asset is because it wasn't staring anybody in the face and it developed as an asset over time. And so it is
Right.
really important to Lauren's point, okay, that you not give up, okay, that you not walk away. Maggie, you see people go through mediation, and you do too, Jeff. I'm actually curious from both of you.
Yeah.
So, Maggie, you see people go through mediation. As you know, I'm a litigator, I'm not a mediator. Okay. Sometimes I'll work with people as consultation through mediation, right, in the background. But
Right.
what are the disadvantages of doing the mediation versus going, frankly, the traditional route of me
Right.
or somebody like me?
Right. Right. I want to say first, I would never want to discourage people from trying to do things amicably. first of all. I think that there's a lot of appeal to mediation because it feels like the most amicable route. Number one, if you feel like you're being bullied, you should not be going to a mediator. That is the very first thing I tell people because I very often speak to women who feel they are being bullied. A mediator is not for you if you don't feel like you have any power in this situation, because the mediator doesn't really advocate for either side. The mediator is not going to point out when things necessarily, they might, but I've seen numerous instances, and I'm sure Lisa has too, where mediators did not point out a very, disadvantageous situation for one spouse over another. That's really the problem that I have with mediators. Having said that, I have seen people who were able to split things right down the middle when things were very, very simple, when both people were cooperating. It really can work. But if you feel in any way that there's a power imbalance, I would say it's probably not to your benefit to go to a mediator.
Yeah, mediator's there to split the baby, for lack of a better term, is what I've seen in the past, and get a win for them. And they walk out of this feeling, that they got the best deal for both sides, but oftentimes it's not.
Right.
Oftentimes, and I've been involved in mediations too. And you're right. It's a difficult road to go down, and they're not an advocate for you. That's one thing for sure. Don't think that,
No,
when they're talking to you, I hate to say it, it's almost like talking to a car salesman sometimes because they're there to sell you the car, but they come on off like they're your friend type thing. That's the same kind of feeling I get when I get involved in a mediation.
right. I would say my impression and my experience is that a mediator's goal is to do things quickly
Yes.
because that's what they're hired to do. They're hired
Hmm.
because people want to do it quick and they want to do it cheaply.
Well,
And
Hmm.
what I often see is that the moneyed spouse will put on the pressure and say, let's hire a mediator. Let's just do this quickly. Often because, as Gary pointed out, they may have something to hide. They
Yeah,
know that it's to their advantage to finish
sure.
quickly.
Do you,
So,
absolutely.
do you agree, Jeff?
Yeah, I'm not a big fan of mediation for the most part. First of all, most good attorneys will try to bring the parties together in essence to mediate. The
yes.
problem with a mediator, as Gary and Maggie were saying, the goal is to get people to come to an agreement, but that doesn't mean it's a good agreement. So, and anybody could be a mediator, okay? You don't have to be an attorney, you don't have
Hmm.
to be a
Right.
judge, you don't have to be credentialed. You don't have to be, you could be a psychologist or anybody and be a mediator. And again, they're not giving advice. They're supposed to be neutral. Um, and in my experience, I mean, most good attorneys, even if they're litigators, will try to come, to a good agreement outside of going to court. They only go to court when it's like, somebody's digging in their heels, they're being unreasonable, and you just, I've always said you can't be reasonable with an unreasonable person. So
Right.
sometimes
Right.
you have to go to court.
Hmm.
So I agree with both with Maggie and Jeff on this. I have seen people be taken of advantage of in a very big way in mediation because they don't have the ability to advocate for
Right.
themselves. And so if you can't advocate for yourself, then you shouldn't be in mediation. Now, I will say this, more and more, even in my office, we are doing the discovery, all of the work that we do, let's say with Gary. And then when we have all the numbers together and we understand where all the assets are and what all the liabilities are, and we have the valuations, then to go to a mediator, even a
Right.
retired judge who is very
Mhm.
familiar. Sometimes that is very helpful to getting us together on something. But I think you need to do your discovery first, and you need to have your lawyer in the room. I'm going
No,
to say that.
I think that is spot on, Lisa. And I would say that really what you're suggesting is let's do things in a way that keeps everybody honest
Yes.
before we go to the person who isn't advocating for anyone.
Exactly.
And you do it with your eyes wide open.
Exactly.
And
Mhm.
if you do it Lisa's way, you know exactly what you're getting into, what you're giving up, what your
Mhm.
benefits, what your detriments are, etc.
And it
So,
also works if you're stuck on like one point, like you've come to an
Yes.
agreement with everything, but there's one thing that you're still far apart and you just can't bring it to a final resolution.
Mhm.
Then a mediator could be very helpful where everybody knows the facts, but they just can't agree. So how do you do that? And then you bring in a neutral party to hopefully come to some reasonable agreement.
Jeff, that's exactly what we did in our situation. So I
Yeah.
knew because when I was getting married to my ex, we did the prenup process. So we've done all the financial disclosures already, right? Giant air quotes. So in theory, when we were getting a divorce, just whip out the prenup. It's all here, but we have our son. So we had one thing that we had to go to bat for. And I agree with everything you guys are saying. If you can be amicable and put your BS aside and focus on the kids, mediation is great. The
Hmm.
problem along the way, though, is if you have a question and you need legal advice, the mediator can't do that because they're
Right.
neutral. So they can't
Right.
say, hey, Lauren, this is what I think you should do in this situation. And because I had a mediator and it went on for 2 years, by the very end of it, my mediator actually sent me a message. I have no idea what this means, but it was basically like, I listen, I've been hearing both sides, both parties. Your ex is crazy. You should have gone to litigation. Here are some people I think you
Wow.
should go talk to. This is really not working out for you. You need to go talk to somebody because you're missing out on X, Y, and Z, the tactics he's using on his side. So I felt very grateful to her. But to save you all a ton of time, if you are divorcing somebody that sounds similar to this and there are children involved, I agree with everybody on this panel. Hire the litigators because they can advocate for you and they can answer questions about what's best for you and the child going through this process. And that is the one thing you need at this time because it's another decision you're going to have to make that's hard and emotional. So go to the experts to get advice and counsel at any point.
Gary, this is a great question. So this is a person who does not want to start with an attorney yet. They're not sure if they want a divorce, but they want to get started in the discovery process. What are the documents they should look for?
Hmm.
Insurance policies, tax returns, bank statements, brokerage statements, and I'm gonna even throw in there mortgage statements or go to the county records to see what type of mortgages are recorded on your residence. Because
Mm.
I've seen too many times
Wow.
second mortgages taken out or a home equity loan that both of you might have signed for that you might have forgotten about that's still in existence, that's been drawn down upon, that's going to some post office box in East Jabip. That's just less of Yonkers. No, I'm just kidding. But what I'm saying to you is that it's never going to go to the marital residence. It's going to go somewhere else.
Mm-hmm.
So those items should, but again, I think insurance policies really are a good place to go. And again, the bank statements, because you want to see not only what's going into the bank statement, but what's going out of the bank statement. So it's both sides of the transaction. You know how much the spouse makes or should be making, but you want to also see where the other transactions are going. And someone just wrote credit reports. Sure, if you can get a credit report. That'd be a great place. Or credit card statements.
Oh,
All right.
Mhm.
absolutely.
So there
Mhm.
might be credit cards out there that you might not be aware of. So I talked about going to a private investigator if you don't want to go to an attorney or someone like me that could possibly pull a report on the individual that'll show their assets, the known aliases, the known relatives, what cars they own, what houses they own, et cetera, et cetera.
And somebody asked about marital waste, and that's one reason you want to get all credit cards. Is somebody having an affair? What are all these charges to Tiffany's or
Mhm.
hotels or whatever? If you live in Manhattan, why are you renting a hotel room in Manhattan? Those type of things that it's called dissipation of marital assets. The other thing that we haven't mentioned yet, as far as assets, is people should understand what their premarital assets were that they
Love
brought
that.
into the marriage. If you have
Mhm.
a 401k and you're going to divide it, well, as of the date of the marriage, you might have had X amount in there that doesn't get divided. Or let's say you own the condo or a house before you got married, and then you move into it as a married couple, or you sold a premarital house and then you put it down as a down payment. How does that all play into things? So people should know. Obviously, if they did a prenup, they would know what they brought into the marriage and values and all of that. But assuming they don't have that, that's important. And the sooner you do something like that, because it's going to be hard going back 15, 20 years to find
Right.
records, or, if they're stock brokerage accounts
Hmm.
and companies have been sold and transferred and whatever, you may not be able to get that. So that's important as soon as you can, as close to the date of marriage, um, get a copy of your statement and keep it somewhere safe, or, take a picture of it and keep it in a file.
Yeah, I was just going to add one other thing when you're going through this for discovery purposes. I was involved, and it just sparked my memory. I was going through a case one time where the husband had a girlfriend on the side who owned a residence. Now they lived in an apartment, and every month he was paying a gardener out of the marital checkbook that the wife was not aware of.
Mm.
And it turned out that he was paying the gardener for the girlfriend's house. So you should really look and understand what the transactions are for and who they're for. It's very easy to take the disbursements or the canceled checks, and not only what's written on the front of the canceled check, turn the canceled check over. Because sometimes what's on the back of the canceled check does not always match what's on the front of the canceled check. The check might be made out to cash, but it
Mm.
might be stamped by a landscaping company or something else that
Right.
will prove an expense that's not part of the marital estate.
So let's just talk about marital versus separate since you raised it, Jeff.
Sure.
Can you explain what the difference is between marital and separate?
Well, separate is usually premarital, before you were married, but not always. I mean, it could be something you inherited from, your parents or your grandparents. It could be, part of a personal injury award. I mean, there are a number of things that could be considered separate. Also, separate could be after the date of separation. If you filed for divorce, what happens after? So usually what's marital is typically from the date of marriage to the date of separation or the date of filing, um, unless it's, something that was inherited, or let's say a gift from a parent to you specifically. And then some of that gets complicated because there could be commingling where, you used what was
Mhm.
premarital and you put it into a joint checking account, and, it could be traced. And I assume, Gary, you do that as well. But it becomes convoluted and it becomes very difficult. And tracing is very expensive, especially if you're going back years and years and years to actually see what came in, what went out. So it's always good to keep your premarital stuff separate, keep it in an individual account. Don't put your paycheck into that account, keep it separate, and don't commingle.
Yeah, I was going to say, once you commingle, it's not separate property anymore for all
Well,
intents
yeah,
and purposes.
yeah, it's transmutated, I believe.
Mhm.
So I think it's commingled, and when it is commingled, you're going to need a really good forensic accountant to try to tease out as much as you can of it. And don't give up, because sometimes you can trace it.
Mhm.
Retirement accounts, there's ways to deal with these issues. Okay. If you
Mhm.
had retirement accounts, there's other documents other than account statements. Speak to your lawyer about this, speak to your accounting firm that's working with you. There are other ways to tease this out. And it's not just what you had as of the date of marriage, but it could also be the appreciation of what you had as of the date of
Right.
Mhm.
marriage. So particularly for retirement accounts. So it's really important that you do spend the time and that you do try to tease out as much as you can. And I will say we spend a lot of time with clients trying to tease out their separate property because it usually is worth it once you do it. So
And
that
that goes for prenups too, Lisa. Just because you
yes.
signed a prenup does not mean that it's an ironclad prenup.
Yes,
We've been involved in numerous cases where you read the
yes.
prenup and one spouse interprets the prenup to mean X, the other spouse means it to mean Y, and in reality it's Z. And it's
And I think
usually, go
that's
ahead.
right. And I think that's why it's so important that the prenups be carefully drafted, that you think it out. I mean, it is so important, as Gary knows, right, that you make sure that every word that you're thinking about in that prenup is actually thought about. Because if you don't have the experience of having litigated a prenup, it is very difficult sometimes. And so it is the interpretation. You have to make sure that you mean what you say and that somebody else is going to be able to interpret it the way that you meant it. Really
Right.
important. Um, Maggie, I want to talk about the marital residence for a minute. Okay. As someone who works a lot with
Yeah.
divorced women, okay, talk to me about the marital residence and keeping the marital residence versus giving up the marital residence versus selling the marital residence. Are the reasons to think? What are the things to think about?
Well, this is probably the subject that Lisa has brought up the most when we've done these presentations with me, because she knows that it's sort of the locus of all the emotion, is the home where you began your life together or you raised your kids. And the question is, what's going to happen? Who's going to stay in the house? Are we going to have to sell the house? If so, will I have enough money to, kind of recreate this magical place that I'm so attached to? And, I have to tell you, I say this as someone, I had a beautiful little house in Chappaqua that I loved and that I dreaded moving out of. I was heartbroken. I was more upset about the house, really, than I was about the end of my marriage. And I'm a little bit embarrassed to say that, but it's the truth. The smartest thing I've ever done in my life was to move out of that house. And frankly, I'm a renter and I'm very pro renting. It's a separate issue. But I would say that one of the reasons to speak to professionals, financial professionals who can advise you, is to discuss your post-divorce housing plans and how your housing plan is going to impact the rest of your life. And again, by that I mean your career planning, your retirement planning, where your kids are going to go to college. Really, everything is interconnected. And, I know that the housing issue is the one that is really so dominant in many women's minds as they go through the process of getting divorced. Um, in the long run, if you can talk to someone who doesn't share your emotional attachment to your house, it really could give you a better perspective on how that's going to impact you financially. And I really can't emphasize enough how important it is to figure that piece out.
Okay, so we're going to be wrapping up. I want one piece of advice from each of you. Lauren, your piece of advice.
Don't give up. I know it's a lot. I know it's expensive. I know the last thing you want to talk about after a long day of work is all of the emotional stuff you're walking around with, all your worries for the future. But don't give up. You have amazing resources available to you. Lean into them, outsource some of this to the professionals, and just know no matter what, you're going to be okay. This is just right now. It will get better.
Gary?
I'm going to say the same thing I said in the beginning, and because I think I've been saying it for years. Knowledge is power. Things are going to be hiding in plain sight. Keep your eyes open, your ears to the ground. Don't let anything be overlooked.
Jeff?
My company tagline has always been think financially, not emotionally. So you've got to be eyes wide open, clear-headed, and don't think, as everybody said, I just want this over with. Think about your future because in 2 years, you're going to turn around and say, what the hell did I do?
Maggie?
I would say, take an empowering action. If it's not tonight, it could be tomorrow morning, but just take an empowering action for yourself. Piggybacking on what Gary said, take an action that increases your understanding of your situation, whether that's consulting with an expert, whether that's looking up information online, whether that's tracking down, an old asset. Take an action and you will feel so much better.
And I'm going to say one thing, and it basically encompasses, I think, what everybody has said. Don't give up. This is like one time. You don't get to redo this. This is not a redo ever. This is, you
True.
have one time to do it. You got here somehow, and now you have to unwind where you are. And it's going to take time, and it's going to take money, but if you trust your professionals and you work with them and you stay with it and you have confidence, you will get to the end, and usually in a good way. So don't give up. It's how Lauren actually started the program. Don't give up, because that is
Winston
what they're hoping
Churchill,
for.
never, ever, ever give up.
Right, that's what they're hoping for. They're hoping you give up.
That's
Okay, I promise you, it's all about wearing you down. So we have another one, actually, another seminar no, not next week, 2 weeks from now on a Wednesday night. And then the fourth one, 2 weeks from now, we have Nick Mamundes from NGH. We also have some other great guests who are speaking, but Nick is a computer forensic and it's not to be missed. And then the last session, we have a vocational analyst, which we've never had before, which will be very interesting to many of you. And also some other great panelists who will be here. So watch what we're doing and come on in. It's free, it's great, and connect with Savvy Ladies. I will tell you that we have 300 professionals who volunteer. Maggie is actually one of them. Yep. And I think, Jeff, you're now one of them, I think.
I will be. Yep.
They are fabulous volunteers who
Going
will help answer financial questions. It is such a phenomenal resource. So please sign up and come on in. Good night, everybody. Thank you
Thank
so
Yeah.
much.
Bye.
you. Bye,
I thank
everybody.
Bye,
Bye.
everyone.
you. Fabulous.
Good
Thank
night.
you.
Great to
Thank you.
be
Thank
here.
you.
Stay warm.
Thank you, Lisa.
Thank you so much.
Thank you. Thank you.
Thank you.